After Bitcoin's dramatic tumble from its highs, it has reignited the debate of the asset as a means of wealth preservation. Joining me today is Trey Reik. He is the managing member over at Bristol Group. Trey, good to have you on StansberryInvestor.com.
Thanks for having me.
So I know you've done a lot of research since you kind of deal in both worlds here, in gold and in Bitcoin. And I'd love to get your perspective today on how you see this dynamic playing out, because with Bitcoin's fall, it has kind of brought back to life the debate of gold versus Bitcoin and which is the ultimate asset.
Excellent. So as you know, you and I have talked over the years about gold markets. And one of the things that you and I have talked about is that there's no investment asset that has as many different, sometimes countervailing investment cues as gold. Some people look at gold as an investment, as an inflation hedge, and some people view it as a deflation hedge. Some people look at gold as a risk-on trade, and others look at it as a risk-off safe harbor. Others favor the dollar, and that reflects. So there's all these countervailing pressures on gold, frustratingly frequently at the same time. And I've worked on Bitcoin now for about 5 years. And what I've learned is that Bitcoin has just as many countervailing investment cues as gold. So I think the biggest shortcoming of discussion and research about gold and Bitcoin is oversimplifying, the comparison. So if you read an article in the paper, it could be about Bitcoin as a transaction capability. And so it's compared to Visa and how many transactions Visa can do. Other article will compare it as a store of value. So what we did is we sat down and we tried to figure out, what is the range of investment cues that is really applied to a portfolio allocation to Bitcoin and gold. And believe it or not, we came up with 10.
Okay.
It sounds like we're parsing, but the first thing is sort of a money proxy. So you have money proxy, currency proxy, slightly different. And then you have the hedge categories. And if you think of the different things that people view Bitcoin and gold as a hedge against, you have portfolio hedge and market hedge, inflation hedge, interest rate hedge, and fiat debasement hedge. And while that sounds like, over parsing, they are similar, but they're actually different, and different types of people and investors are looking for, for those different types of hedges. And then you get into, investment grade reserve. That could be sort of a family office in Denver. And then you get into decentralized asset. And I think that's where Bitcoin really shines. It's the ultimate decentralized asset. And then you have the big bugaboo of store of value. And I think that's where most people throw Bitcoin and gold into a category to oversimplify things. And my view is that as a decentralized asset, nothing really approaches the efficacy of Bitcoin. And as a store of value, I'm not even really sure why Bitcoin is in the conversation as of this time. And then on top of that, if you assess the ability of Bitcoin or gold to satisfy each of those investment objectives, interrelated they may be, but slightly distinct, you have to analyze them in their ability to satisfy. We've identified sort of 6 categories. So you have infancy, Bitcoin's relative 12-year history, immutability, safety, trust, volatility, and scale. So if you take those 6 ways to assess the ability of gold or Bitcoin to serve those 10 investment objectives, you got at least an Excel spreadsheet with 60 cells just to organize your thoughts. So I think it's a much more complicated comparison than it is usually given credit for.
So that said, Trey, and thank you for that. On the point about store of value, where you say, you don't even know why Bitcoin's brought up. Mm-hmm. Can you expand on what you mean by that? Is it not a store of value for you then?
Sure. So, of course, all of this is very subjective and all of this is very emotional. So as I like to say, I don't think I'm going to convince anyone of anything today. The opinions that we all have about Bitcoin and gold, for some reason, are held with very strong conviction. But to me, a store of value would be something that over time maintains its purchasing power. You know, the ad infinitum, you know, repetition for gold is a men's suit, or if you put it away for 10 or 20 years, how will it do versus a barrel of oil? How will it do protecting a portfolio in downdrafts and traditional financial assets, et cetera? The big problem with Bitcoin is still its volatility. And if you look at the run up to the 2017 high at 19,000, I think the 12-month range there was 1,300%. And if you look at the run up to the 2021 high at 64,000, I think the 12-month range was a little higher, around 1,600%. And so my view would be a store of value is really not an appropriate category until you can get your 12-month trading range below 1,500%. I mean, I just think it's just a mathematical thing.
So what I'm hearing from you, Trey, is that you see a place for both assets, but for different uses, right?
100%.
So that said, what is the best use case for gold and the best use of Bitcoin in one's portfolio? How do you manage both?
Once again, a little bit tough to simplify, but let's look at this from, if you're a pension fund with,
right,
or a pension consultant, even better, with $1 trillion in assets, and you're looking for, I think one of the biggest trades over the next year to 2 years will be a move out of bonds. It's not a unique view. I think with rates near zero and the 40-year bull market and bonds largely behind us, it's going to be very difficult to make a lot of money in a sort of 60-40 traditional portfolio. So if you have 275 trillion in global financial assets and assume a large part of that is managed in that 60-40 type of allocation, we estimate there's 40 or 50 trillion in fixed income that is going to be able to find a different home over the next 2 to 3 years. So that 40 trillion, Bitcoin's market cap today, I think is 600 billion or 560 billion. That 40 trillion can't get into 560 billion. So it's going to need to find a home in a more liquid, stable environment than Bitcoin offers. So I would think gold is, a lot of people talk about the fact that the gold bull market is over or behind us, referring back to the peaks of 2009. The way we look at it in an institutional environment, gold's bull market really hasn't even started yet. Institutional allocations are still below 1% on average. And we think it'll be very difficult for that money to be deployed in the crypto universe before it's deployed in the gold universe. So we see sort of a progression there.
Okay, let's talk about the gold price then, Trey, since I know this is really your specialty and what we've had numerous conversations about in the past. When you say the bull market didn't start, you wouldn't say it started last summer when we hit the nominal high of 2000?
So when I say bull market in that sense, I'm talking about the institutional appeal of gold and the role that it can play for a value. And while 1900 was the high, and as we know, in like 2009 or 2011, and now we've slightly exceeded that. It's not really the price itself; it's the use or penetration in terms of percentage of portfolio assets in the institutional arena. That's really what we focus on. You mentioned earlier, what's the difference between, if you're an individual or a family office and you have the ability to withstand that type of volatility, et cetera, Bitcoin is remarkable. In fact, there's never been a more successful speculation in financial history. Bitcoin hit $1 trillion valuation in 12 years. Nothing else, no asset category, no other company, not even Google or Amazon or Microsoft, nothing's ever done that before. So it's the most successful financial speculation in the history of financial markets, and of which we're very jealous over here on the gold side, because Bitcoin investors and gold investors generally share a lot of the same investment objectives and concerns. And obviously, as a gold guy and having done this for 20 years, I'm very jealous, because We certainly expected gold to have done better.
But you're balanced in the sense, Trey, you're not saying that gold is the superior asset or that Bitcoin is a superior asset.
Yeah, they're just very different. I mean, I think their differences, far outweigh and outmeasure their similarities.
So getting back to the bullish case for gold, what kind of forecasts are you looking at for the metal here?
Mm-hmm. You love that question. And, the answer is, I've always, because I'm a gold equity specialist, if you will, the gold price that I envision as a time where gold stocks will, prove their quote unquote metal is a lot lower than, say, the $10,000 gold price that a lot of people prophesize as possible. If we, even have a gold price of 2,500 or 3,000, the gold equities that are properly managed and high quality are going to have a remarkable run. And having done this for 20 years, and I probably shouldn't say this, but I actually look forward to changing my phone number and never talking about gold ever again. So that
say that, but it's not true.
$3,000 gold price, it'd be really hard to find me, because these gold stocks are going to, quadruple.
Yeah, when I asked that question, Trey, it's not so much that I want to know your forecast, though I am curious.
Mm-hmm.
It's I want to know the path. If you're bullish on gold, and whether that forecast is 5, 10,000, 20,000.
Mm-hmm.
I want to learn the environment in which you think we're in that will allow it to flourish and get there.
Right. So they unfortunately, and I try to avoid mentioning this word as often as I can, but it all comes down to the Fed. We're in a Fed world. In March of 2020, when the Fed rolled out the 13 investment asset purchase programs and facilities, I personally thought gold, that the game was up and gold was going to go significantly higher. And I actually thought the market, was in trouble. But this is why I'm not a $10 billion hedge fund manager, because I'm not a multitasker, and all the really, really smart, the Druckenmillers, et cetera, of the world saw this as, the opportunity to get loaded up in stocks for the next 12 to 18 months, which is what's happened. But in my opinion, the whole system has really demonstrated 100% focus and reliability on Fed leverage. And now that the Fed is trying to, you've seen what's happened in the past week, the two dots moved from 2023 to 2022, and we had a fairly significant sell. We're talking about the end of next year, quarter, 0.5%. So I think we're getting near the point where people recognize, quite frankly, that the financial system is a bit of a fraud, and it's all based on Fed leverage. And I think that a small percentage moving to the gold space should really affect the price quite substantially. The problem with Bitcoin, in my opinion, is that just as Fed leverage has increased the valuation of all traditional assets, Bitcoin proponents refuse to discount the Bitcoin price by the same relative amount of inflation. So in other words, if Fed liquidity has made stock and bond prices soar, I don't know why Bitcoin proponents don't recognize that the same Fed liquidity is probably elevated the Bitcoin price at least on par with financial assets. And so the question is, what percentage of it is a reaction to Fed liquidity, and what percentage of, meaning people have bought Bitcoin because they consider these excesses in the system as making Bitcoin necessary, whereas the same leverage has obviously levitated the Bitcoin crypto prices to some degree. No one really knows. So until we get through this latest episode of asset purchases, we're still doing 120 billion per month, which is ridiculous, and 0% interest rates. No one will really know for sure what the value of the Bitcoin value proposition really is.
Let me ask you, Trey, when Bitcoin proponents come out and to your point and say, Bitcoin is the ultimate currency, asset because it's the only thing that cannot be manipulated.
Mhm.
But you mentioned the Fed liquidity. We saw what happened in China. We saw what happens when Elon Musk puts out a tweet regarding Bitcoin. So what do you make of that statement when people say, well, Bitcoin can't be manipulated when the price can move so easily based on even a single tweet?
In our recent letter, our May letter, we pointed out, and by the way, we really didn't know the details of the extended Bitcoin trading network until we wrote that letter, and we spent a couple weeks trying to assess what derivative and options trading is. But on the morning of the big down day, which was when the PBOC re-announced their restrictions and Bitcoin fell 35% in a 24-hour period, the trading volume of Bitcoin derivatives at one of 385 exchanges was 200 billion. So the amount of daily trading in Bitcoin derivatives, Bitcoin options, and Bitcoin is 100 times greater than most people recognize. So, for example, yesterday's decline to 28,000 and subsequent rebound, I guarantee you in the next day or two, we're going to read all sorts of articles about how 300,000, 100-time leverage Bitcoin trading accounts were wiped out at MarginX and Bitfinance and BitMEX and all of these places. So a lot of these places trade Bitcoin at 100 times leverage. And I think another thing that the Bitcoin cognoscenti have ignored is that, this decentralized ledger, which is so immaculately perfect in its conception and execution, is clearly being influenced by Wall Street firms and unregulated firms unilaterally injecting or imposing incredible amounts of leverage on the Bitcoin network. So when you say what makes Bitcoin trade, it's the most wide open 100 times leverage market we've ever seen.
I guess just my final question and thoughts I'd like to hear from you, Trey, is like I said at the start, you've done extensive research on Bitcoin, on gold. You're an expert in gold equities. What's your final takeaway for investors watching? What is one to do here in the current environment?
Mm-hmm. That's a great question. It obviously depends completely on portfolio objectives, et cetera. In my mind, if you're in the outside the institutional environment of the most sophisticated folks like Paul Tudor Jones and Skybridge and Guggenheim and places that have lots of leverage, lots of different types, of vehicles to choose from. Bitcoin to me is a personal speculation, and to the degree to which you can handle that type of volatility, an allocation to Bitcoin makes a lot of sense. I've started to read more and more lately, people like Paul Tudor Jones, the new phrase about Bitcoin is we don't even look at it anymore. So if you have a certain amount of CAD, 5%, whatever it is, 2% that you feel comfortable with putting a bit in Bitcoin or cryptos and looking at it 10 years from now, I think is a marvelous idea. But if you're the state of Alaska or the city of Houston or Dartmouth University, the concept of investing in Bitcoin, in my opinion, at this stage is really not even on the map. And I do believe gold will, over the next 2 to 3 years, offer a tremendous alternative to this 40, 50 trillion in capital that we see moving out of the bond market.
All right, interesting thoughts. So we'll see how this all plays out, Trey. It's always good speaking with you. Thank you so much for joining me here on StansberryInvestor.com.
Thanks, Daniela. Good to see you.
Good to see you as well. Have a great summer. And thank you all for watching. We'll have much more for you. So be sure to stay tuned to StansberryInvestor.com. In the meantime, remember to share us where you watch us. That's it for me. I'm Daniela Cambone.